We're both off the
No,
screen.
we're good. No, we're good.
You sure? Okay.
Hello, everyone. Welcome to another episode of On the Record with your host, Tone Vase, and I am here with Ronnie, Moas. I keep trying to pronounce the name correctly. And as you guys know, we have a huge difference of opinion when it comes to the markets, whether it's a hodl strategy or an actively trading strategy. Also, whether you should hold just Bitcoin, whether you should hold a diversified portfolio. And we're going to go over a couple of things today and on those fronts, so you can see both of our views on it. And we are here in Miami at the Blockchain Nations Conference. Jim Rogers is going to come and speak in about 45 minutes, so that's all the time we have. We both actually want to go and see Jim Rogers. So Ronnie, go ahead and do a very brief introduction, though my entire audience is familiar with your work. But go ahead, give a brief introduction and your financial background.
Well, standpointresearch.com is my company. I have a top 20 ranking versus more than 4,700 people in the stock market the last 10 years. Each of my 600 recommendations was time-stamped intraday by at least 3 different news wires. I've given more than 100 television, newspaper, radio, and magazine interviews, and I am a headline speaker at conferences around the world. When people sign up for my service, they get a list of all my current open stock and crypto recommendations. They get my 87-page crypto report. I then add you to my mailing list, and you get several emails a week from me and all of my new recommendations that come out during the course of the year. I put out dozens of stock and crypto recommendations during the course of the year.
Okay, excellent. So let's talk about let's touch on traditional markets, right? So you do recommend individual stocks, correct, as well?
Yes, I have a 155 variable computer model that took me 5 years to develop. And once I get an idea off the computer model, I apply heavy fundamental and subjective overlays before going out with an actual recommendation. So I don't say I like XYZ because it scored well on my computer model. I'm giving you a 20, 30-page report to back it up.
So approximately how many stocks a year do you recommend?
Well, I run a few hundred names through my computer model every week, and usually I will come out with 2 or 3 names per month.
And do you also recommend when it's time to sell them as well?
Absolutely.
Or no?
With stocks, I do have sell targets, and I tell you when to get out. And once I tell you to get out, I tell you what I think you should roll the proceeds over into, as opposed to crypto. When I make recommendations, it's a buy and hold, add on dips type of recommendation.
Okay, so so you do recommend individual stock picking over let's say just buying and holding the S&P 500.
Yes. Now, 9 times out of 10, when you go to a stock picker, chances are you are going to underperform the S&P. So for the average person, it might be better to just go into an index fund. Because if you pay a money manager 2% a year for the next 10 years and the stock market doesn't move, guess what? You just lost 20% of your money, and the broker has 20% of your money.
Well, yeah, I agree. That's why you just buy the index.
So that's it. But I have a 71% accuracy rate for my performance the last 10 years. 71% of my 600 recommendations beat the S&P 500, and I usually beat the S&P 500 every year. The problem is, right now, with the market at an all-time high, bought an S&P index fund, you are going into an index where 3/4 of the names are overvalued. Whereas my computer model is biased towards names that are trading out of favor and at a low multiple relative to their earnings.
So, so how come you believe that a technical analyst that's also picking stocks is not able to outperform a fundamental analyst?
Well, my problem with technical analysis is as follows. There's several issues that concern me. First of all, if I show you 2 charts right now, and they are identical, mirror images of each other, you will give me the same price forecast for each of them because all you're doing is looking at the chart. Now, what if I tell you the chart on the left of a name trading at 10 times earnings with $5 billion in cash, no debt, in an industry that's on the rise, and the other chart is a name trading at 20 or 30 times earnings with no cash, $5 billion in debt in an industry that's on the decline. Now what do you say? Do you still have the same price forecast?
I wouldn't expect those two to have exactly the same price charts. I believe that there is enough fundamental analysts out there that buy and sell these names that give a technical analyst a good way to jump on trades without having to do all of that legwork. People like you are doing that legwork for.
I understand that argument. The bottom line is, if you look at Bitcoin chart right now, you're going to tell me whether you like it or whether you don't like it. My argument is, I just wrote an 87-page report, and I have information in that report that might change your decision. So my whole point is, if you're going to look at charts, you also need to look at the valuation, you need to look at the fundamentals, you need to look at who's on the board of directors, you need to understand whether or not they're cooking their books and fudging their numbers from an accounting standpoint.
How are you able to do that?
It's a 155 variable computer model that I have. It took me 5 years to develop. And after I get an idea off the computer model, I'm applying fundamental and subjective overlays on top of what the computer model is telling me. So I'm not leaving any stone unturned.
Well, I would love to know how your computer model is able to detect fraud, because I'm sure the SEC would be very interested in that model as well.
No, my computer model doesn't detect fraud. That comes into play with the fundamental and subjective analysis. I can see from the data that I have whether a company is writing off an expense as a one-time charge, or whether they're coming out with one charge every quarter, year after year, which means they're artificially depressing their PE ratio.
Okay.
So it's a lot of work.
No, I understand it's a lot of work, which is why a lot of technical analysts leave that work to those that are looking at individual stocks, and they set up their computer models to look for very specific signals. I've been able to call them fairly well. There are much better technical analysts than even myself. And I will say that some of the best technical analysts that I know, they make a ridiculous amount of money from technical analysis, and no one even knows they exist because they have their strategies. And the moment they give up those strategies, their strategies would no longer be profitable. But let's change gears over to Bitcoin.
This is important. Right. Well, I'm going into Bitcoin now. This is really important. I have people calling me sometimes, crying to me on the phone. Ronnie, last night before I went to sleep, a technical analyst came out with a sell signal on Bitcoin, and I sold my Bitcoin. I woke up this morning and Bitcoin was trading $1,500 above where it was when I went to sleep last night. Now, I am a bull on Bitcoin. In July, I came out with a $50,000 target. We were at 2570 at the time. I can explain to you why I think Bitcoin is going to $50,000. I get upset when technical analysts scare people out of what may be an opportunity of a lifetime and may not tell them when to get back in. Or maybe the people that are going in and out of this just can't take this roller coaster ride anymore. And the technical analysts may be scaring them out of a position, which I have actually managed to keep all of my subscribers in the entire time. I have 40,000 people following me on Twitter, and I posted screenshots last month of my purchases when we broke below $9,000, $8,000, and $7,000. This is a buy and hold, add on dip's name that you want to hold on to.
Okay, let's I'm displaying the Bitcoin chart for the live viewers and those that will see it later. So we're talking in July. So in July,
where are we today? I was tied up with the conference. What did we do today?
We're at $9,000 right now.
Oh, so we bounced $200 today.
We bounced, yeah.
Okay.
So I just want to go back to July. So in June into July, we fell from 3,000 down to 1,800. And then we bounced from 1,800 and almost right. So in July, you forecasted a $50,000.
Yes, it's 2570. I think it was the 3rd of July.
In early July. Okay,
yes.
That's actually good. You remain with that $50,000 target. So your recommendation to buy.
And the target was for 2020. I was looking
that's
out
fine.
3 years.
That was going to be my next question, right?
Yeah.
So I was going to talk about your time target, and so the target that you set, the recommendation that you gave right here in July on this dip, remains in place today into 2020 for a $50,000
Exactly.
target.
And my target for the end of next year is 28,000.
28,000 for the end of next year.
Yes.
Okay, okay. I have no quarrel with that. Okay. Now, so throughout this whole downturn from 20,000, you remained hold recommendation.
Absolutely.
Okay.
I was actually telling people to buy gradually as it was going down.
Okay.
And I reiterated that all the way down to 6,600 because I knew, especially in February, March, that the price was being manipulated. And I can elaborate on that.
Well, I will have you elaborate on that in a minute. I just want to go through what my recommendations were from around that time up to now, so you understand where I'm coming from. Now, my general personal position is that I do not trade Bitcoin. I say that on almost every video to all my followers. I am a buy and holder of Bitcoin. There are 3 reasons why I do not trade Bitcoin. And I make that very clear to all my followers, so because they always keep asking. One of those reasons is my job is almost like yourself to travel the world and speak at conferences and evangelize. Well, my job is to evangelize Bitcoin. That's my primary job. So I am not in front of a computer 24/7. In fact, I spent all day trading traditional markets today. We can go back to that if we have time. But I do not have the time to babysit a 24-hour market. The only way I'm going to be a trader of Bitcoin is if I sit in front of a computer 24/7. That's one reason why I'm a buy and holder of Bitcoin. I actually did not sell anything other than selling Bitcoin to pay my bills.
Did you buy any when it dropped below 10,000? Did you empty your position?
No, I don't make any fiat money. I don't have any fiat income coming in.
Okay.
So I don't have the opportunity to buy unless I sell my car or my apartment.
I see.
So I only liquidate Bitcoin to pay my bills.
Okay.
And any cash any fiat money that comes in from my income, I basically keep it to pay my bills. I don't have that much coming in. I'm basically I live perfectly within my means. So I'm just a holder for a long term myself. That's one reason why I don't trade Bitcoin. Another reason I don't trade Bitcoin is because there are always these unregulated exchanges, and I don't want to risk my Bitcoin on any exchange. I believe that you need to hold on to your own Bitcoin. Those are the main 2 reasons. My third reason is why I don't trade Bitcoin is because after directional trading for 10 years, I have moved on to direction neutral trading with options and spreads. And that's what I am now a specialist in. I'm not itching to go back to directional trading. However, and I explained that you're a buy and holder, but for those people that actually want to trade Bitcoin, I tell them that trading is a full-time job and you need to learn how to trade. That's why this is why I educate people on how to trade. Now, when a person tells you that they listen to a technical analyst and they now don't know what to do, what do you tell them?
I'm sorry, I missed the question.
Like when that person called you crying that some technical analyst told you to solve, what do you tell that person?
I told her to buy it back.
Okay. So my answer is slightly different. Mm-hmm. My answer to them is you need to stop listening to what other people do and either learn how to trade yourself or be a buy and holder. The other thing I tell them to do is, yes, trading is a full-time job and it's dangerous. Now, just so you know, I actually advise the traders, not the holders, the traders, to sell at $3,000. I timed the bottom here actually perfectly at 1,800, and videos and my Twitter proves that. I also called the top at 5,000, almost to the hour of it happening. And I timed the bottom at 3,000, also to the day that it happened for a buy signal. I did not do as good in the $7,500 area. And this is, by the way, those calls is what gave me my popularity, just so you know. When it came time for the 7,500, I expected this to be the top for the year at 7,500. And I expected a drop to at least 5,000. I missed the drop by 400 bucks, okay, for traders. My recommendation to get back in the market for traders was in the vicinity of this area. So those that happened, the traders that paid attention to my call that sold at 7,500 would have been buying back a little bit lower than that. So for those that did that, they made some money. The problem happens is, and I see recently, in a recent downtrend, which I'll get to in a second, I was recommending for traders to get out at 13,000 because I expected a $7,000 drop. I was then recommending traders to get out at 10,000 because I was expecting another $3,000 to $5,000 drop. I was also recommending traders to be very careful and probably get out at 6,500 recently. And that's where the problem comes in. When the same person wanted to listen to someone like me, but didn't at 13 and didn't at 10, but finally decided to do it at 6.5, now they're getting very, very upset when it goes back to 9. Where if a person actually was paying attention, they're still in a profitable exit and they can buy back in any time, right? So I understand where that person necessarily is coming from, but you're also following what I'm saying, right? They pick and choose when they eventually listen. Now, once we got above 7,500, I had no idea where this thing was going to top, but it scared me because to me, anything over 7,500 last year was overvalued of Bitcoin. And I expected it to crash back down to at least 7,500, which is exactly what happened. Right now, I still expect lower prices for Bitcoin. But if you're not an active trader and you don't know what you're doing, you need to just buy and hold, which is what I do. So that's how I go through my traders. But let me.
I don't really believe in technical analysis. You have to know when to get in, when to get out,
Correct.
When to get in again, when to
Correct.
get out. I don't know anyone on earth that can beat the market doing that. I think you're going to end up losing a lot more money being on the sidelines and seeing rallies than you will gain by catching a little bit of a decline on a red candle every once in a while. This is something that I think is undervalued by 70, 80, 90%. And it's not something that you want to go to. You don't want to go to sleep at night and not have a position in this. If you want to hold 2/3 of your position, buy and hold, and then trade with the other third, you can do that. If you have one of the few, if you have a good technical analyst that you trust that can beat the market, great. My problem is that 90% of the people on Twitter are not qualified and people are listening to them.
I would raise that percentage.
Exactly, exactly.
Well, we agree there.
This is a buy and hold, and instead of selling every time the chart gets weak, I'm adding to my position when it goes on sale. I was able to double my position in Bitcoin during the collapse in the first 3 months of the year. And I'm really happy that it happened.
So I do agree with you that 90% of the traders will lose all their money. It's no different than gambling and going to play poker. But you do admit that there are professional poker players that do very, very well.
Yeah, and there's also a bell curve, and there's always going to be people on the tails of each curve. Correct. There's going to be people that get wiped out. There's going to be people that beat the market. But Correct. Most people trying to play this game are going to regret it.
Again, I agree with you there. So let's change gears. I want to get through the major topics. Let's talk about diversification in the crypto space versus only buying and holding the leader. We both agree that Bitcoin is hands down the leader
Absolutely.
in the crypto space, right?
Yes and no. My view on this is as follows. Bitcoin will probably remain at the top of the mountain the same way Amazon has the last 15 years. But there is no guarantee that Bitcoin will remain at the top of the mountain. You saw what Buster Douglas did to Mike Tyson. You saw what Uber did to the yellow taxi drivers. You saw what Amazon did to the shopping malls. You saw BlackBerry, and you saw what Facebook did to MySpace. Bitcoin could be the joke on late night talk shows 2 years from now. So economics 101, where I come from, you're supposed to have a diversified portfolio. If you put I believe crypto total market cap is going from 400 billion between 2 and 4 billion in the next 3 to 5 years. There is no guarantee that Bitcoin will lead that move. So you want to be diversified, 20, 30, 40% of your money spread out among the top 10, 15, 20 altcoins.
But
2% of your money in each name.
so, well, 2% in the top 10, 15 leaves you with 50% empty, right? So
No, you put 2% in the top 15 names, you're left with 70% in Bitcoin.
oh, okay. So other than Bitcoin,
Right, right.
Okay, so
right.
other than Bitcoin, you recommend 2% in
Something like that, 1 to 2%.
including Ethereum, only 2 to 5%.
No, Ethereum you can overweight well.
Okay.
Yeah.
So, but anytime the top 10 changes, you're supposed to
You
rebalance the portfolio?
probably want to kick something out every time it drops out of the top 40.
Okay. So when something like BitConnect made it into the top 10, would you, I mean, what happens there?
Follow BitConnect. That was not a name that was on my radar. I was probably writing a report on one of the other names at the time. I don't, depending on who you ask, if you look at the top 20 today, 5, 10, 15 of those names might not be in the top 20 or even the top 40 3 years from now.
Probably a year from now.
Exactly. So you definitely want to have a rebalancing mechanism in this index fund that you're managing for yourself. Otherwise, you're going to have a lot of these top 20 names right now losing half of their value or more. You saw what happened in March.
Oh, right. Okay, so my view on it is different. I do not believe that Bitcoin will be dethroned, and here's my argument for that. Unlike MySpace and Facebook, unlike Uber and taxi cabs.
This is important. I don't care whether Bitcoin is dethroned or not. But what if it underperforms the other 10 or 15 names on this move from 400 billion to 4 trillion? You underperform the market. So I don't care if they get knocked out. I don't want them to underperform either, right? You see, it wasn't anybody that had all their money in Bitcoin in April underperformed the market by 2,000 basis points.
Sure.
Yeah.
This year, yes. We'll see what happens next year.
Right.
My view on it is that unlike those other things that got knocked off, the big difference here is that you consider crypto store of value.
Yes.
Correct?
I buy and hold it. I'm not trying to go shopping with my Bitcoin.
But I only consider Bitcoin store of value. And from my point of view, Bitcoin has the smartest developers who, by the way, I've done plenty of fundamental analysis on Bitcoin. I lived, breathed Bitcoin for almost 5 years now. Also pretty much with Ethereum as well and some of the other ones. And to me, everything other than Bitcoin is the equivalent of a penny stock trading at a gross overvaluation. And that is why my recommendation is not to diversify your crypto portfolio into anything other than Bitcoin, because to me, Bitcoin will be the one and only remaining crypto, because if Bitcoin is dethroned, the store of value property will totally disappear from all blockchains. The coins may be used for medium of exchange, kind of almost like a hot potato. You convert to the flavor of the month that is tradable. You do the trade, you go back to government fiat or back to the S&P 500. But that store of value property, because Bitcoin does have the smartest developers, and it does have the history, and it does have the branding, I don't see any people trusting any blockchain if Bitcoin goes belly up.
I don't think they're going belly up, but you have to understand, I come from the stock market, and economics 101 is you don't put all your eggs in one basket. I would not be able to sleep at night if all of my money was in Bitcoin, or if all of my money was in Apple, for that matter, or Microsoft. I believe in diversification. I'm not asking you to put an even amount of your money in each of these top 20 names. I'm saying put 70% in Bitcoin, but put 1 or 2% into a couple of dozen names that are below there.
Okay. So we have a few more minutes. On a final note, can you so how do you separate, right? You've done fundamental analysis on most of the current top 10 in crypto, correct?
Yes.
All right. So how do you see something like, let's pick one. Let's say I don't like naming names, but let's say something like Steam, right? Is that in your top 10? No?
I have a 35-page report going out on Steam in 2 weeks.
Okay. So do you think Steemit is worth investing in and holding?
I'm not done writing the report.
Okay.
I'm putting out a 35-page report.
Let's do another one then. Let's do another one.
I don't like talking about specific names. There are several reasons for that. Okay. Mainly, my subscribers get upset.
Okay.
But I'll let you know that Steam was my most recent recommendation. And yesterday, when the market dropped by 10%, that went up by 20% on heavy volume.
Right. Well, yeah. I didn't pick Steemit for Steemit. I picked it for the style of the crypto that Steemit is.
Right.
To me, the concept of Steemit is we, 3 people, print our own money, like monopoly money, and then we convince people to write on our website, and we will pay them in the money that we print. To me, this is A, illegal because you're creating your own money out of thin air, and B, economically unsustainable because sooner or later people will realize you're just printing your own money and bribing people with your own money. So it's that concept. Steemit is one of these. Almost every single ICO is the same. Right. Every application token is the same. And to me, Ethereum is the same, actually.
Right.
It's that style.
Right.
Do you have a problem with that kind of a currency? Or is it more like, as long as it's in the top 10, it's making money, and hopefully you can get out of it when it falls out of the top 10?
I got your question. Where I come from, you're not smarter than the market. You are not smarter than the market. I'm not smarter than the market either. If you have 1,500 names and you're in the top 20, you must be doing something right. There's hundreds of millions, if not billions of dollars pouring into some of these names. And I'm not going to try to be a hero and say I'm right and everyone else is wrong. I'm not that smart. So I'm not trying to beat the market here. If there's a name in the top 20, I'm going to write a 30, 40-page report on it. I'm going to tell you what I like about it, what I don't like about it, what the bull case is, what the bear case is. But I'm also going to tell you, listen, it usually does not go from, a name usually does not end up in the top 1% or top 2% of a universe by accident.
Well, but isn't that how we get bubbles, like the .com bubble, where all of the .coms were trading at $100 a share and they had nothing but a fancy website?
I am looking exactly at cryptocurrency the way I looked at the NASDAQ 20 years ago. I went to the coin market cap today. I see what the top 20 names are. The market is sending you a clear signal. These are the 20 names you want to be in over the next 3 to 5 years. With crypto, you do have to drop names as they slide under the top 50 because it's going to be a higher turnover. But look at what the NASDAQ told you 20 years ago. If you looked at the market cap rankings, it said buy Facebook, Amazon, Netflix, Google, Apple, Intel, Microsoft, Cisco, so on and so forth. And if you took that signal from the market and bought those names and held on to them, you're retired today. You could have tried to be smarter than the market and said, I don't believe this technology is going to be around a few years from now, or this technology is going to be around a few years from now, and I'm putting all my money into Microsoft. And guess what? You probably would have underperformed everybody that was in the index fund.
Well, during the downturn, you would have done much better. Microsoft actually held up. But
Microsoft only did well in the last 3-4 years. Before that, it was really underperforming for an entire decade.
Well, that's true, but during the crash of the NASDAQ, Microsoft only fell about 40%, while the NASDAQ corrected 78%. Did you catch representation yesterday about the comparison between the ICOs and the .coms?
I'm doing 2 conferences back to back. The only person that I was able to get a chance to see is Jim Rogers in a few minutes. Gotcha. That was the only time I had, and I didn't get to see anyone, unfortunately, but I did catch your presentation on the cruise in January that we co-headlined together.
I don't remember if it was the same one about the NASDAQ bubble versus the ICO bubble, or it was a Bitcoin presentation.
It was in January. I don't even remember, but I did see it. I did watch you. I did watch you.
I did. Yeah. Okay, so yeah, but at the time, the market was also had a company called VA Linux, which was like the Dell, but for Linux instead of Windows. And that company was trading at $300 a share before it went down to 0. Pets.com By the way, do you know who the biggest investor in Pets.com was at the time?
No.
It was actually Amazon. They
Yeah.
own 54% of
Yeah.
Pets.com. A lot of people don't
But
know that.
I've been telling people all along, 95% of the names outside the top 50 are worthless. I'm on the same page with you there.
Right.
But I just can't sleep at night if I'm in crypto and all of my money is in Bitcoin. I want to have 30% of my money outside of Bitcoin, just in case you are wrong.
Right. And I am the opposite of that, because I see all of this other stuff as the penny stocks, as the .coms, with no developers and no business and no revenue, and people are just trading them up in order to gamble and make money. So just like you said, and clearly my portfolio has underperformed the overall market, because Bitcoin's market share went from 90% down to 50. So I have actually underperformed the diversified portfolio, but I am on a crusade to make sure that people don't bring this bubble out of control.
You know what the best part about being diversified is right now? That if you go to CoinMarketCap and you look at which names moved the most in the last week, some of them moved 20%, 30% more. I'm in every one of those names.
But to me, scams.
And you know what? During this rally that we had, Bitcoin was up 30%. Most of my names were up 50, 60, 70%. I don't like going to CoinMarketCap and looking at the top 20 and seeing the best performing name in a particular week, and I didn't have any money in there. It just for me, it gives me peace of mind.
Okay, so well, I want to close out on this without like starting an argument. So you recommend a diversified portfolio, right?
Absolutely.
But let's say, you have individual reports on pretty much everything in the top 20, right?
No, I've put out 13 recommendations since July when I came into the space. 8 or 9 of them were in the top 40. There are 3 or 4 names outside the top 40, but I don't go below 100.
So let's say, let me throw a hypothetical at you, right? Let's say you write a report on something that is number 8 or number 9 on CoinMarketCap, and your recommendation is that this is worth buying and holding for X amount of years, right?
Right.
But the person reads that report, takes the recommendation, but does not take your recommendation of having it as a 3% or 5% of a balanced portfolio, but puts all of his money into that token, and then that token turns out to be a scam like BitConnect, and it goes to 0 overnight. And that person goes crying to me, what happens?
Excellent question. I have more than 2,500 subscribers, and a week does not go by that I do not warn them. I do not put more than 1 to 2% of your money in any recommendation I give you outside of Ethereum and Bitcoin. I have my best idea in 20 years right now. In 20 years, I never came up with an idea like this. It already went up 150% since I gave it to my subscribers in early February. And I told them I have almost as much money in this name as I have in Bitcoin. And I'm willing to bet the shirt on my back, and I have, that it's probably going to go up by 250 to 500% in the next few weeks. But I told them, please do not put more than 1 to 2% of your money in this. I told it to them 20 times in the last 2 months. If someone does not listen to what I said, it's on them. And I have a paper trail backing up my defense on that.
And just for the record, you do not take any payment in Bitcoin or crypto to write a report for that crypto, just because that's also very common in the space, as you know.
I have never, since I'm on Twitter, ever tweeted out the name of one of my recommendations. That was outside the top 20.
And no one actually pays you to write the reports. You write the reports all on your own.
In 20 years, I've been paid to write 2 reports. One of them I never recommended because I did not get paid for a buy recommendation. I got paid to write a report, and I never put it out because they did not deliver on what they promised me they were going to deliver. I don't want to mention any names, but I would be a gazillionaire if I took money from people that want. A day doesn't go by that someone does not approach me and ask me to join their board, write a paper for them, look at their white paper. I have not entered a relationship with any company in the entire year. I don't need it. It took me 20 years to build my reputation. I'm not going to lose it in 20 minutes.
All right, Ronnie, thank you for coming in, and thank you for joining us. Just tell people one more time how they can find you on Twitter or your website, and I'll add that into the video description as well.
My 2 points. First of all, my website is standpointresearch.com. You can get all the information there or on my Twitter page. But more importantly, I have another website. It's philanthropyandphilosophy.com. When you scroll up and down that homepage, there are 24 charities listed there. Those are the finest charities in the world. And every one of those charities that you click on opens up a 4-page report. Me and you have a religious, moral, and ethical obligation to use our voice to speak on behalf of people that don't have a voice in this world. We have 1 billion people in the world living below the poverty line, and we need to try to get people to give a little bit more money to charity than they are giving, because they're not giving enough, and there's a lot of people that are suffering right now in the world and living in conditions that are not fit for human beings. So just please go to philanthropyandphilosophy.com, choose a couple of charities that strike a nerve with you, and give them money and your time directly.
And I will add those links into the description of this video right after I probably right after we are done with it. All right, Ronnie, thank you very much. Let's go see Jim Rogers.
Yes.
And thank you very much for watching, guys. I'll try to bring you another interview or two right after Jim Rogers' talk. If not, I will see everyone tomorrow morning on another Bitcoin Morning Brief.